Hello again. This is our look at the Friday, September 19th trading session. In front of you is the economic calendar. Really not a lot going on that's going to move the markets until we get to Canada. And the first thing that we would say is the first half of the day you could probably just write off anyways, because it's all about the British pound. It's all about whether or not Scotland stays in the United Kingdom and what happens to the British pound currency as well as the FTSE. If the Scots stay, it is a positive sign for the pound and the FTSE. If they leave, expect chaos in both markets. It's really that simple at this point. The truth of the matter is we don't really see anything of consequence until we get to core CPI month over month, anticipated to come out at 0.2% from Ottawa, and the Canadian dollar, of course, will be affected. We have formed a hammer on the dollar-CAD pair. It's very likely that if this number is poor, the US dollar will gain and we will break out to the upside. That's actually our base case anyways. Even if this number is poor, we think, or even if this number comes in line, we think eventually that's going to happen. Will it happen today? Maybe, maybe not, but we do think eventually this pair is going to 112. After that, there's really not a lot out there, so this is going to be more or less a very technically driven trading session. First market we're looking at is the S&P 500, which does in fact look like it's trying to break out. If we can get a daily close above the highs here for the session, say 2010 or so, then we think that we will start our next leg higher in the S&P 500, which of course makes sense. US stocks are favored. Looking at the DAX, you can see that we are trying to break out to the upside. We think that will continue as money is probably a bit nervous about the UK. We do like buying calls in the DAX and do expect this market to eventually hit 10,000 euros. Looking at the aforementioned Canadian dollar, it looks like we are consolidating in this area, and 110 being broken to the upside is really what we need to see, as I had mentioned previously, in order to start buying. At that point, we should hit 112 with a stop, with a little bit of a resistance at 111. We are in an uptrend, and you can make an argument for a trend line here, so even a little bit more of a drift lower really doesn't concern us. We feel that the market is going to continue doing this, especially considering that oil is performing so poorly. And you can see that the British pound is rising. This is before we know what goes on in Scotland, but quite frankly, it looks like we've already made up our mind. We've blown through this gap. That's always a positive sign. As soon as we get confirmation that the Scots are staying, I would anticipate seeing 165 at the least, and quite frankly, 167 is probably going to happen. At this rate, we may even hit 165 before we know the actual vote. So, looks like we've already made our decision, so therefore we like buying calls with the British pound. And with that, taking a look at the very short Friday, September 19th trading session.